So 3 things that you can do to really audit your debt on your mortgage. Number 1, if you're someone who purchased with less than 20% down, there's a good chance you have what's called a PMI, or a private mortgage insurance payment, on top of your monthly principal and interest. But did you know that with the appreciation that we have seen in the last several years, that if your home value to the amount of debt you have is less than 80%, that you might be eligible to remove your PMI payment from your mortgage? And a lot of times all this takes is a simple call to your mortgage originator to talk to them about whether or not you are eligible. And if you can remove that PMI payment, that could save you several $100s a month. So definitely worth a call if you bought several years ago and you've seen some appreciation. You may be eligible for this. The next thing I want to talk about is the ability to leverage the equity in your home for what most people call a HELOC, or a home equity line of credit. So if you have available equity in your home, you may be able to actually get a line of credit that's secured by that equity in your home and have it available to you for all sorts of things. You can have it available to you and not use it just in case of an emergency. Instead of using a high interest rate credit card when something bad happens, you can actually use this line of credit at a much lower interest rate, saving you tons of money over the years. Or you might have this line of credit and you might want to use it for a home improvement, something that's actually going to add additional value to your home. And then when rates are at a point where you want to refinance, you can actually refinance your mortgage and your home equity line into one fixed rate mortgage, saving you even more money down the road. And the very last thing, and I think it's a very simple thing that a lot of people aren't aware of, is the power of extra payments. And I'm not talking about making a big lump sum principal reduction. I'm talking about 1 of 2 things. Maybe you just want to make one extra payment equal to your normal monthly payment a year. And that one payment a year can actually reduce the length of your 30-year mortgage by 5 or 6 years, saving you tons of money in interest. The other thing you can do, and I think this is really, really savvy because it has a much more limited impact on your cash flow, is you can actually just add 1/12 of your monthly payment to your original payment. So let's say your monthly mortgage payment is $2,400 a month. If you added $200 a month on that normal payment, you would still get the same benefit of that one extra payment a year, and it wouldn't impact your monthly spending and your monthly cash flow at the same level as maybe doing one lump sum $2,400 payment one time throughout the year. So that's a really easy way. And again, you could save 5 or 6 years of interest on your monthly mortgage, and can equate to thousands of dollars. So if you have not yet had a chance to look at what your monthly, we would be happy to do that with you. The first thing you need to know is the value of your home. So reach out to us. We can help you get a market value estimate for your property. And this gives you a lot of confidence if you want to go call your banker and say, hey, I think I qualify to remove my PMI payment, or maybe I have some extra equity and I want to get that HELOC. Those 2 things can really put you in control of your future with the equity that's in your home. We are not just here for you when you're buying or selling. We are your partners in wealth here at Colorado Property Group. So reach out to us, let us know how we can help, or reach out to me. I'm here for you. And if you have any questions, just let us know. We're here to be a part of your plan.